Good morning, everyone, and welcome to the European crossover webinar. And we've seen a pretty good move here in the euro. One of the things that we've been focusing on over this last week was initially was this 1307, and we had seen that move had come up before, and then we shrunk and fell back. But as we started going and push a little bit higher, and we had actually moved the resistance up to 1373, and you can see this thing just really has taken off here with the euro. And someone had asked about, questions about being short. This was not yesterday, but day before yesterday, and they're looking to short the euro, and they're asking in the general chat room. I think I even mentioned that yesterday, and I said, just watch the daily close. That's it. I mean, really pretty much just about that. And certainly, we got a very favorable close yesterday. You can see here that we had even taken out, that was our best close. And then we've even extended that now. So, you have to think about, you're just on the wrong side. I mean, if you're trying to take on the euro, you're on the wrong side of the technicals. We've already talked about that several times. We'll cover the news stories to get a flavor for the day. But as I mentioned, I think it was yesterday, we were covering the news. I think it was regarding the equities, and I was saying about it's all a bunch of BS. When the equity sold off, it was, oh, well, now they're recognizing the death rates, and now they're recognizing the closures. And I'm like, the death rates have been going on for over a month. They didn't recognize it before. So the only thing you can really hang your hat on at the end of the day is the technicals. Not that it's all about just technicals, but the technicals allow us to judge our risk. And, once again, the market's going to, once it gets going in one direction, it's going to plow against those levels when we take out a 2-hour level at a certain price. I think we talked about that actually on Monday and said, hey, look, now it's open to challenge the next level. And that's what it does. It will. I mean, we've seen over the last, few months is, you see these markets say they haven't traded like they used to many years ago, where you get on a run and you'll see a lot of false breakouts or breakdowns. But once again, when you look at the shorter term areas, whether it's a 30-minute, we talked about the exponential moving averages. I know some people use that 48. I use a 9 to 27, but it works very well in the 30-minute. But one thing you can't deny is once we get past these levels, I'm not sure why people would be trying to take on the market. It doesn't make sense. And I always mention that, not that I know so much, but I always try and say, learn from my mistakes. Over the years, I don't know how many, I can pull up a weekly chart and just once for reference, that's what I'm doing it for. I don't know how many times I would take on the euro and just get absolutely run over. The one time I remember so clearly, and I remember arguing the point when it was in the 20s, it got up to 130. I think it might have been at this time back then in 14, and there's no way the euro can be above 125, 128. And I remember adding on shorts over in here, and I remember at the time, this is right when Merkel gave her speech. I remember so well because I was short, and basically I just threw in the towel. And Blake decided to get short right at that point. I remember it so clearly. I think it was like 38.85 or something like that. And then from there, we were just down, down, down. So at the end of the day, you can argue why the euro is going to be weak or why the euro is going to be stronger, whatever. But at the end of the day, the one thing you can hang your hat on is the technicals. If nothing else, it'll save you from your own self. We are up against, some resistance here, but you can see we're even pushing beyond that. And it's just like I said, when you look at it on a daily or you go, look on a 2-hour chart, you're just basically spitting in the wind. It's going to come back and hit you in the face when you see, we see this close. And you look here, and I'll give you an example here. I focus more on the futures because I like to look at the volume. We can focus on that. That's one of the reasons I thought they were going to get a low in the NASDAQ. I thought by mid-morning, we'd seen so much volume coming through that I thought we were kind of sold out. I didn't think it was going to necessarily rally a whole lot, although I was looking for a later day rally, and I thought we could even push even higher. But once again, like I said, when you take out, like, look at this bar here, this 2-hour bar here. Look how it took out, and I always go with the closes right here. People, like I said, people say, why do you put your technical levels here or there, and I go, because it's the close is what, close of the open is what matters. That's what I call put up or shut up time at the end of the hour or the 2 hours or the daily. That's what's going to count. So you look at this 2 hour coming across right here. You see, we closed above that. You see right here, look at this coming across, just to highlight. See this 2 hour chart, and I'm going to put it in pink just to highlight. So when you take this out, it's not the levels up in here that matter. They don't matter because, like I said, how many people sold the actual high and how many people bought the actual low. But the close is what matters. So when you take out this, you've got the best close since way back here. Right here was what appears to be like June the 10th, okay? So even though the market came back, you can see it tested here. Notice how it tested, it got below, but it closed above. You see here? And then we rip because nothing to go and stand the way. Now there's a reason today they're saying, oh, the vaccine looks better hopes, blah, blah, blah. But the point is, who's going to stand in the way? And if you did stand in the way, like Blake likes to say, put yourself in the other person's shoes. So let's say you were short here and you're going, man, this euro, they're coming back to the top, I'm short. And then you get stopped out here. You're not going to say, okay, I just got stopped out. Let me go on and get short again 10 pips later. No, you're going to say, if you are one of those that says, I don't believe in euro, going to go, well, they stopped me out here. What's the next level of resistance? We're right up here at 1450. I'll come back and revisit it then. So, you're not going to have anything to fight it. So once you close above a key level, the 2 hour closing above this level, which happened to be 1391, nobody's going to stand in the way then. Even though we paused here because you goosed a lot of stops and they've been taken out, but the market pauses here, but no one's going to get short. And if anything, anybody's going to be buying on dips. And then now the market is able to take off and run with any kind of a positive news. Yeah, Mark was just saying, morning, doing a nice job. Okay, very nice. He said, I've learned a lot from you attending the European crossover. Please continue to post the levels in the chat too. I appreciate your insight and technicals. What's your view on the Dow? Okay, we'll go and take a look on the Dow because Mark hasn't asked for the Dow in a while. So we will go and look at those and we'll spend a little bit of time there. But that was my take on here. And one of the reasons I focus so much on the futures is because I said I like to go in and look because I can see what we're doing per the volume. So I'm looking at the 1 minute chart, and you can see we blew doors. I mean, this is a lot of volume at this time of the morning here. So we might be able to go and take a little bit of a respite here, and that's why I use the volume. And that's actually what I did with yesterday. And I'll just give a quick example and why I look at the futures and why I say even if you don't trade the futures, you only trade the spot FX. You need to be paying attention to what's going on in the futures. And let me go back here, hold on. So yesterday in the NAS, you see here as we broke lower yesterday coming into the lows, look at this huge volume. I mean, we were just, blowing and going here as the market was coming under pressure. And we got down here, look how huge the volume was. And even when we got down here, as we started to move higher, we were still seeing very, put it right here. I should push this out so we can see a little, you can see how significant that was at the time. So my thoughts were, look at this. Look at all that volume that had taken place. And then as we got up in here, volume was still pretty steady, but as we took a dip down here, notice how low the volume was. So I was looking for a rally later in the day. I was actually hoping, we didn't quite get there. I was hoping that we were going to smash up and go all the way up to potentially as high as 10,780. We did get some news and they bumped up way high, but nonetheless, like I said, this is what told me when I looked at here, you had huge volume and then you make a new low and you still had huge volume. And then notice how the volume stays pretty steady here. You see here on this big down move, we got the big volume here. We come down here, we still have strong volume. And as we set a new low, notice how much lower the volume is right here. You see? So on the break here, we get the good volume. And then we come down here, we get very good volume again, right here, because they think, okay, we're going to take off. We fall back again. And then notice as we come down here, although the volume's still pretty strong, it's nowhere as high. So now people are starting to accumulate. And I'd actually gotten long a couple of times, but it allowed, this market to accumulate. I didn't stay long for very long on some of these moves at all because I didn't want to get run over because potentially I knew that we could still fall, but I thought those are the reasons why I was looking at the volume. So once again, going back is that even if you don't trade the futures, you only trade the spot FX, it really makes a big deal. It makes a key thing to look at the volume. It'll give you, like yesterday, we had the bias chart support for the cable at 2486. And I did post it in the room right when we were at 2487. I said we're at bias chart support. And I think the low was 2482. So it missed it by 4 pips. But at the time, you could have taken a look at the volume and see, like, what's the volume doing at that time? And that would have given you a good idea as to, hey, are we near, is this market pretty much goosed on the way down? So, go back and see what I wouldn't even, actually at the time I wasn't even paying attention to the volume at the time. But okay, here we go. Perfect. Look at this. Remember the cable was, the low was 2486. Well, I had 2486 on the spot for support. Low was 2482. And you can see here, let's pull this out here. Doggone it. There we go. Okay, we made that low. Okay, you see here, when we got low, we got down to 2486, still pretty good volume. Once we started to move away, and that was our support, 2486, notice how the volume really picked up. So at that point, you probably felt pretty good and say, oh, you can step in. We had good volume. This was good volume right here. We went to that low, and you can see a lot of volume they were trading a lot. Look how low we were down here. And then once we got there and got to 2046, look at all that volume. And so they were really, you're starting to see some short covering. I didn't even trade it. I mean, I know that we did rally quite a bit off of those lows. We rallied, I think it was 70 pips. But you can see here, look how big the volume was here. As we started to move away, you knew a bottom was set in place. And then all you have to do at this point is run your, right here on a pullback. You really don't want the market to go below this part on the pullback right there. Pull this down right here. And we didn't. So you can see here, we come down here, very good volume right here. We can go in and see if we can move it. There, you see here, look at that, good volume here. And as we come down here to 2046, wow, look at all that volume taking place. Look at this you can see this is the average basically right here, right around 200. We jump up here and these are minute bars, 500, 300, 600, 450, 500. You're like, wow, that's a lot of volume going across. And that's coming right into our support. And then as we start to break away, moving higher, okay, now we're starting to settle out. Hey, maybe we have a bottom in here. That's where our bias chart support is. We see the market dip back right here. And then look, wow, 825 contracts traded. Then you know we've got a bottom in place. And then you don't want to see this level taken out on the back, way back. Because if it does, it opens the door for a challenge back lower. And then look, then the market just, from there, we rallied 70 pips off that low. Look at that. That's where the volume will help you, even if you're trading the spot. So anyway, we'll go, Mark wanted to go and take a look at the Dow, so we'll take a look at the Dow. Let's see what we are on a 2 hour here. Actually, we can go right into that chart right now. Okay, so let's, I'm not even sure if I even have the Dow anymore. I thought I did. Oh yeah, I do. Well, I've got it on 30-minute because I don't pick. I'm pretty much just focusing on just the NASDAQ and to a certain extent the SPOOs. But let's take a look at the Dow. This is on the 30-minute. They did gap higher. Pretty good move here. Let's take a look. Well, we're right up here at the 78%. You see that? Right, 26,800. And then if you pull this further out, let's take a look here. So at the 78%, and look at this level right here. You see right here? That's 26,916. So really, I'd say 26,916 to right here. You see that this little zone I've even put out here? That's what I would look at here. Right there. You see? I don't know if you can see it. Watch. I don't know if it'll see. There's actually a low right in there. Right there. Obviously, you can see this one here and here. So what I'd be looking at is, you're already at the 78%. So if they push them in higher, I'd be looking at this zone here. Right there. 26,905 to 2703. You see that? That's a pretty good little zone there. So if they want to jump up real quick in the morning, and if you were getting short, this is not a bad area. Or if you say I'm going to hang on for one more pop in the morning, if they're going to do like that, then I would look in here where the market could go and get a little tired. So there we go. So we're going in. So I pointed out with the NAS, as I mentioned, if we looked at that volume, you can see what kind of move we had and why. I thought, hey, I think that might have been it there. And we shared that here in the morning. You can see that monster volume. And then when we get down here, huge volume. And then we come down here, more volume. And then while we're setting this low, the volume, although very, very high, is not as high here. So the market, you can see they're starting to, at this point, I want to say we knew for sure they're accumulating, but it was into a support area because remember we mentioned 10,369. I posted a chart there, although I did from other levels. What I'm saying is I posted it on there it is. I think it was right here. Anyway, I had 10,369, and you can see here there was a hammer also. But let me see if it was on the. I know I posted that. I don't know if it was on the 5-minute or whatever, but I remember I mentioned 10,369. I even had some limits at 10,330. I actually didn't get long. I had to chase a little bit here, and I was really ticked off at myself because I had to let it dip back and come up. And because I came in, which was a really poor decision on my part, which is okay, if you want to pick it up at levels, great, pick it up at the levels. But if you're in a down market, you don't want to go on and then come in late, which is what I did here. Then I had to sit there, and then we did go on and move higher, and I got up here. But if I'd have been smart, I could have let it ride for a much more, because I thought maybe we're going to get, I wasn't sure how much, but you can see eventually the market kept working higher. And then you can see here we had a hammer here. And then here is where I think a lot of people got faked out. They came down here, and here's another hammer on the 30-minute, and you can see we even got a buy signal. And of course we got the gap. And I'm hoping that we could maybe pop up here. I'd like to have shorted in here. We'll see what happens. But anyway, with that, let's go and take a look at the news as far as data, and then we will take a look at the stories and move on. You're welcome, Mark. Says thanks. So let's go and take a look at what's on the calendar. Okay, bear with me. So we did have UK PPI prices. Italian consumer prices came out at the top of the hour, or we just came in, as we came in. Then we don't have anything until we get into the U.S. session. We do have New York Fed manufacturing at 8:30, import and export prices at 8:30, and we have Canadian manufacturing. So that can move the dollar CAD. And then industrial production and capacity utilization at 9:15. It's not a huge report, but here's one key thing. We do have Bank of Canada today at 10 a.m. Eastern. So let's move this out of the way and we'll hit the news. You're still up here near these highs, but we are a bit stretched up in here. Anyway, let's go on and cover the news here. So the Australian and New Zealand dollars test resistance and offshore buyers big on bonds. Australian and New Zealand dollars edge higher on Wednesday as progress on COVID-19 vaccine buoyed U.S. equities, while details of a bumper Aussie bond sale showed strong demand from foreign buyers. The Aussie added to 69.98, struggled to break resistance around 70.20 ahead of the June peak at 70.69. The QE firmed to 65.52. The Aussie has been wedded to the U.S. stocks in recent weeks as a barometer of risk appetite and moved higher with S&P futures on news Moderna experimental vaccine for COVID showed early progress. Yeah, it was the full details on this report, and it was very good. I will say that, but to me, it's just another stupid story. But it did gap high, but I think it's more important that they've just got the market. Anybody that's shorted on the way up, they're under pressure. So I would look at least for the NASDAQ, I was mentioning, I did post some charts of, I would look for stops above this 10,740 I think I had. If they can get above that, then they'll goose it some more. Domestic events were not so promising as the survey showed consumer sentiment had been shaken by the lockdown of Melbourne and fresh coronavirus outbreaks. That added to the case for the government to keep pumping stimulus into the economy and not scale back employment support in September as initially intended. Recent outbreak will remind households and businesses alike that the virus will not disappear anytime soon. The likelihood that both job seeker and job keeper will need to be extended in some form, as well as other policy measures, are rising. The Aussie enjoyed a tailwind from Tuesday's $17 billion sale of Aussie 2025 bonds. Details of the offer showed 45% on the debt went to offshore investors. Good demand. Mainly in Asia, ex-Japan, and the UK among the buyers. Fund managers took 27%, hedge funds 23%, and central banks 8%. Wow, that is very, very good demand. No wonder the Aussie's doing so well. We expect anything between 4 to 8 billion of the ACGB 651s to be issued, with the bulk of the interest to come from North America and UK fund managers. The long end is extremely attractive on the FX hedge basis. The pickup over foreign bonds are near record. One of the things that I will say about the euro, we did have, I think Amanda shared that, we had a big option expiring yesterday. One of the key things was when it expired, the euro was still holding steady. It wasn't like it came back in. That probably gave you an idea that, hey, this thing has some good, good demand. Hang on one moment. Okay, the euro hits a 4-month high versus the dollar on stimulus and recovery hopes. The euro rose to 4-month highs against the dollar on Wednesday on hopes the European Union leaders may agree on stimulus and deepening fiscal integration to shield the economy from the pandemic. Dollar was on the defensive, particularly against other growth leveraged currencies such as the Australian dollar, following upticks in U.S. inflation and news of progress on the vaccine development. The euro rose to 114 euros after reaching its highest level from March 10th at 14.23. Against the yen, the common currency hit a 1-month high of 22.47 euro yen. Germany, France, and Italy have all taken severe lockdown steps as a result of the coronavirus. Now appears to be under control. The economy should be gradually recovering, said Bart Wakabayashi. The euro has been helped by the helps of the European Union to agree on its stimulus later this week on a rescue financing package that will limit the economic damage to the bloc from the coronavirus pandemic. The euro strength helped to push the dollar index. The dollar extended losses on Tuesday after U.S. consumer prices rebounded 0.6 on month, most in nearly 8 years, further boosting investors' risk appetite. Moderna's experimental vaccine for COVID showed it was safe and provoked immune response in 45 healthy volunteers in an ongoing early-stage study. Gross domestic product rose by 1.8% in May, falling by a record 20.8% in April. In regards to the sterling, Trump signed legislation and executive order to hold China accountable for the national security law imposed on Hong Kong. Trump also signed a bill approved by Congress to penalize banks doing business with Chinese officials who implement the new security law. In response, Chinese Foreign Ministry said on Wednesday it will impose retaliatory sanctions on the U.S., individuals, and entities. While there are increasing doubts on whether Hong Kong will remain an open market, investors think this is a very long-term issue, said Ayaka Seta with Mitsui. Diplomatic battles between the two big powers have intensified on several other fronts, such as COVID, pandemic, military operations in the South China Sea, and trade. Canadian dollar bounced back from a two-week low, changing hands at 36.04 per dollar, despite the prospect of travel restrictions between Canada and the United States being extended. Canadian Central Bank expected to leave rates on hold at a policy announcement on Wednesday, with investors likely to focus on the bank's outlook for the economy and potential guidance on its bond buying. I was going to see if there's anything on the morning bid. There is. So here we go. And then we'll move into the analysis. So the U.S. coronavirus cases hit records and reopenings are dialed back. Federal Reserve officials admitted economic growth forecast from the June policy meeting did not factor in the risk of a second wave. Fed Governor Lau Brainerd summed it up as a thick fog of uncertainty and said downside risks predominate. Similar message from the corporate world. Delta Airlines CEO Ed Bastian said the industry was at a stall right now. There are signs when the fog might lift, markets reckon, so focusing on positive news on the Moderna's COVID-19 vaccine, shaping up to an event-packed day as Trump ordered an end to Hong Kong special status. Let me see, blah, blah, blah. Elsewhere, European Union Court will rule on appeal by Apple in Ireland that Apple must pay 13 billion euros, holy smokes, in back taxes. The case is a key for low-tax EU jurisdictions. Then we have OPEC meeting that is likely to boost output by 2 million barrels per day. So let's see here. That's going to be it. No event on the central bank front with an uneventful Bank of Japan meeting, nor are the Bank of Canada and ECB expected to do anything in their upcoming meetings. So with that, let's move this out of the way. We'll get into the analysis. Let me just step away real quick while I get a refill on some water and turn down the AC because it's pretty doggone hot here in Texas. So hang on one moment. Bear with me. So bear with me while I just get a quick thing of water, and I'll be right back. Okay, folks, I'm back, and let me go on and pull up the bias chart. You're still right up here at the highs. Volume very low, though. Okay. So the euro closed The heck, did it not save it? Doggone it. Oh, that must be an old one? The heck? Oh, that's from that one. Okay, no problem. Okay, here we go. So the euro posted a solid close, taking out 1373 with a 4-month high. Immediate resistance is going to be 1436. We can see we're right above that, followed by 1481. Support is 1337. So let's fill out the 1337. And you can see here that we have, excuse me, 1373, and we close above that. And we're referencing that for a 4-month high. So we really look at that. We really got zooming. And hang on, I'm trying to update this to daily. No, it's not showing. There we go. And you can see the significance here. There we go. As we took out that 1337, we even got past this 1372. So really looking pretty spry. And 1436, we are above it. This would be a stretch, I think, to get to 1481. Today's only Wednesday, and there's still the risk about this European thing coming up. So if it was Thursday, I think we could push to 1481 because that would spark even further covering as we were to move into Friday. But today's Wednesday. So I'm going to go on. I'll tell you what we'll do. Let's look at this high, rebound high here, which was 1458. And right now the high is 1446. Well, I'm looking at the futures, and it still acts like it would potentially push higher. So I tell you what we're going to do. We're going to go with that rebound high there for the resistance. That's going to be 1458. But I think that you probably have to take some off the table ahead of that European thing, the whole financing thing, whatever, recovery fund, whatever it is. I'm not paying that much attention to it. Although some people have mentioned that they thought it was a good short a couple of days ago. Obviously, they were wrong. One moment. So let's go move into the cable. So the cable found support, a bias chart support level of 2486. We talked about that earlier. Rebounding to close with a small hammer. Resistance will be 2602 with support at 2492. Well, the dollar's really under some kind of pressure as we start. We're back above this 2602, and we've challenged that a couple of times. We can move it just a hair above that. You see this close right there? We are above it nonetheless, but we're going to say that support, which comes in at 26, let's call it 2614. If it pushes above it, it does. I just don't know if the dollar's going to come completely unglued right now for us to take this out. Not saying that it couldn't, but that's going to be resistance, which is 2614, which we're above right now. Oh, we had 2617 from yesterday. Kind of nittish. We're going to keep the 2617. The only difference is we will move this to 2492. And let's go into the Aussie. This Aussie dollar is just something else. I'm just not amazed, and just, I guess the best way to say is I'm, with too much hyperbole, I'm a bit in awe of this thing. It won't pull back. to save your breath. It reminds me of Blake's example of the beach ball. It's just something else. The Aussie dipped slightly, only to recover with U.S. equities to close at 69.74. Resistance will be 70.27, with support at 69.07. So there we go. And they still might tag it too. And support's going to be 69.07. God, it just keeps going higher. And let's go into the Kiwi. We're actually going to do a little bit extended um, analysis today. We'll be looking at the FX futures, and we'll be looking at the indices. Kind of give a lay of the land, and we'll see what happens today. In case y'all want to stick around a little bit later. So this oh my God, this webinar is probably going to go a little over an hour. We're already past the halfway mark. We're only barely even touched the majors. So the Kiwi, excuse me, Kiwi paired back on. Started kind of losing my voice yesterday. I don't know why, but. Kiwi paired back on Tuesday, but managed to come off the lows. Resistance will be 65.92 and support is 64.74. One moment. Okay, so I put on here one of the webinar, but we'll be doing extensive analysis in the indices and FX futures this morning. Kind of, especially with the euro at these new highs, we kind of like want to know where we're at. So just wanted to, people might just say, okay, it's probably going to end in a little bit or whatever. So in case you stick around, we might very well go over an hour. We probably will go over an hour, to be honest with you. We'll see, maybe we can fly through the initial FX. But anyway, Kiwi paired back on Tuesday, but managed to come off the lows. Resistance will be 65.92. I meant to say 65.94 because that's the level up there. And 65.94. And the low's going to be 64.74. Puts it a little bit lower. And let's go and move into the dollar CAD. We do have Bank of Canada today, so just keep that in mind. Dollar CAD rallied on Tuesday to bias chart resistance before paring back sub 136. Resistance remains 36.49. We actually had resistance yesterday at 36.49. I think the high yesterday was 36.48. Yeah, 36.47. So not bad. But once again, like I said, it's not any special analysis I'm doing. I'm just going off certain little highs and lows right here. That's it. So I mean, it's good to get it. But like I told you before, the bias chart, for those that may be new to listening, the bias chart is not to necessarily call the actual high or the low, although sometimes we get pretty lucky. We did yesterday with the cable. The low was only off by 4 pips. Dollar CAD, the high was only up by 2 pips. But it's really to say this is the area where I expect some good volume, some good fighting to come in. Think of it as you're backing someone into the corner, and you're backing someone into the corner, and once you get to 1458, watch for a little bit of a fight to come in, meaning volume on both sides. So people saying, okay, I'll get the hell out of Dodge here at 1458, and some people on the other side saying, you better, because I'm going to take the fight to you at 1458. So that's what I'm saying. It doesn't mean we can't blast beyond it, potentially, but I would look for fights in these areas right here. So we got it yesterday at the 36.49. We're going to keep that, and support is going to be 35.34. So once again, a little bit lower. that's where I think we could see some volume come in. Sometimes it'll go beyond that, but at least that's what we expect. So let's go and move into the dollar peso. So on the dollar peso, the dollar peso posted a bearish engulfing bar on Tuesday. You can see that. We had a nice up day, and then we turn around and just engulf the whole entire bar. Support for Wednesday will be 22.25 with resistance at 22.66. So it's going to be a pretty tight range today, it appears. And let's go to the dollar yen. So the dollar yen slightly extended its gains on Tuesday after Monday's solid close, especially considering how dead we've been. So this is a good close, really a bullish engulfing line here. But all we did was barely extend these gains. After Monday's solid close, resistance on Wednesday will be 758. Well, it looks like we're already sliding back down the pole with support at 709. Well, look, we've already gone beyond that. Look, we got as low as 693 right here. So we're below it. We're not way above it, way below it, but we got to respect where we're at right now. Not that it's that far beyond it. So, but there's a key level right here, which is the open here and the close. That would be support. So this should hold. If it gets beyond here, you open a brand new leg down. So that's going to be 688. So we have to respect that. It's because it's so close and it'd be significant. So 688. And on the upside, you see this close, this level, that's where we'll just go right there, which is, you know what, we'll stick with this if we get this reversal. I don't think we're going to, but right there, 752. But this thing's already, we're just moving it a little bit lower. This thing's already under pressure. Holy smokes. I mean, I thought they wouldn't even get to 709, and look how quickly they ran down there and goose the stops. Let's go to the dollar index. Well, yesterday we had, which wasn't bad, we had 96.09. We've actually already come down here to finally tag it. Dollar index tested bias chart support at 96.09. Actually, today we've already gone beyond. So I said support looking out is going to be 95.71, and we're at 95.86. So it's going to be 95.71. Resistance at this point, it's just going to be the low for this day right there. You see right there? Actually, that's where they did run out of gas up here. 96. Well, we're going to move it a little bit higher, which is right to this level. 96.43. 96.43. And let's go into the cross rates. Well, these need to be reloaded. So we kind of held our own a little bit, but nothing like out of the ordinary. So it's just going to be this level up here for resistance, 70.51. We did have 70.37, which I guess wasn't bad because the high yesterday was 70.26. but we're going to allow it to move up a little bit higher, which is going to be 70.51. Thing's still holding up really well. And on the downside, we had 69.30. This thing's still holding up like a champ, but we'll go right here with this close here, and that confluences with this low there, 69.25. Oh, we had 69.30, so just leave it at the 30. I thought it was maybe even lower than that. So we'll keep the 30. We'll keep it at 30. Let's go with the euro yen. We should see some movement there with how strong the euro's doing. And the euro's been weaker. Well, no, it's actually a little bit stronger. But anyway, let's look. So, boy, we are still going here. And look at this. It's nice, strong moves. We have to go on. You just have to go with this level. Doesn't necessarily mean they're going to get there today, but that is a huge key level for the market to try and get to. Look at that. 22.64. Oh, that's going to be resistance. Downside is going to be these highs here, but that's still, well, we'll go, you see right here, this close here and this open, and that confluences with this high. You see right there? That'll be support, 21.81. Let's go into the euro odd. Euro acting a little bit tired up here, but the volume's still relatively light. Euro odd. We tried to push up a little bit higher yesterday, but this Aussie's still so strong. So we had 64.22, we're at 63.33. I still like the 64.22 in case the odd were to, it doesn't seem like it's going to pause, but Euro's still relatively strong. So let's keep the 64.22. Yesterday, the high was 63.98. So we could goose some stops. So let's go with the 64.22 and 62.49 on the low side. It's actually going to be this. You see the close here? Right there, that's going to be it. And actually, the open for that prior day, which is going to be 62.54. That'll be support. Let's go to the Euro Kiwi. Getting a little bit of a boost now. We had 75 even. That's still going to stay there. Kiwi's still pretty strong, so we'll keep it with 75 even. If the Kiwi does start to weaken a little bit, the euro still looks pretty strong. So once again, we may not even see that for a couple of days, but it's going to be 75 even. And on support is going to be, you see the lows here? These lows come across the wicks. That confluences with this high right there. You see that? So that's going to be support, which is 73.26. On to the RCN. Well, we did press higher, and we had 74.97, which we did take it out just slightly, but we're pairing back again already. Let's just keep that there, 74.97. It'll be interesting to see how this closes today. And then support 73.73. So, well, let's see. Support then is actually this line right there, 74.28. 74.28. Onto the guppy. I would have thought we'd a little bit better movement here. But we did come off that. Just like the cable, we got a little hammer, but we're not doing too much with it today. So support was 33.86. The low was 33.96. So not bad, off by 10. We'll keep that there. And on the upside, we had 34.91, where the high today so far is 35.10. The high yesterday was 34.87, so that wasn't bad too also. But we're going to go with this. You see this close right there? 35.30. So that'll be resistance. And lastly, the sterling nod. There we go. My buy chart got stuck with that upper bar from the Reuters feed. 81.06, that's going to remain the same. We are a bit weaker, though. I would have expected a little bit better. Yesterday's high was 81 even, so this wasn't bad at the time, 81.06. We have paired back. I really don't want to move this any lower. We're going to keep that 81.06, although it is well off. The only difference is you see this low right here, the open, that's going to be support, which is 79.12. Boy, that's pretty low. And that's going to wrap it up for equities. And we'll move into the analysis. Let's go and take a look at the euro. We'll look at the FX futures. So bear with me. And then we'll go into the indices. So let's take a look where we stand. Which is where can we read the news reports on ForexAnalytix? I can share them. I'll be happy to go and do that. So I'll just go and post them. If you want going forward, I'll just go in and do that. So just so that I'll start to do that going forward. So that's a good thing. That way, if you want to read them, you can read them. I just posted the Aussie. Here's the euro. And the morning bid wasn't nothing to read of any real extent. But going forward, I'll go and post them. That'll make it easier. Let me go on and move into, and that was a great suggestion or asking about it. Let me go on and move into the FX futures. Okay, here we go. So let's take a look over here with the euro. So we're looking at the 2 hour. We do have we are forming a little bit of a gravestone doji here, but the bar doesn't close until another hour. So a lot can happen in between here and there. But looking at the 2 hour, it's 1467 here. Now, the futures are trading at 1447, which is trading at a 16 pip premium. So if whatever your analysis is, add 16 pips if you're looking at the future. So, well, I should say deduct. So if you're saying, oh, that's an interesting level, well, the spot is trading at 1431, or now probably 1432. So it's a 16 pip difference. So you kind of just equate these here. But you can see here, you see, look at the things I was looking at previously before. You see how we got above this trend line, and then these are notes I just gave to myself, because I wasn't even doing any analysis here on the webinar here. You see, euro held defense of the trend line. And I tell you what, a lot of these I haven't even taken because I'd be looking at indices or something like that. I kind of, and actually I think here, I remember I got up a little bit later and the market was already here or something like that. So some of these I had missed, but I said, look, I held the trend line. And then, and this just on the 2 hour, you got another hammer here. And this was key here because look, that was, if you look on here, I'll pull this down a bit. You see where the bar closed right here? Let's open this up here so you can see. You see where it closed? So that was important if we could get above that. And we did just that. We got above it. You see here with a hammer. So that opened the door. You know you're going to go higher because you can see here, this is key. We rally here and look where the market closed. So look how we come all the way back down here. We come back. We look how we fell again right here at that close. We close above it. It looks like, okay, we're clipping along, which we did. We closed above it. We're kind of clipping along. We press up against resistance. We close right down the resistance spot. We dip back. And I don't know what precipitated here, what news or whatever, but we came back. But look how the market came back like a champ and put in a hammer right here on this dip. And the more key thing was we closed above that bar, which is this is what got the market going in the first place. And look, from there, they didn't even look back. And then when they came back, you can see here, they didn't make it back to this bar. And they came here and tested the 1346. And look, we're up and away. The key thing was right here. You see where this is this close here. We got up here. We turned around and failed. Once we got above here, the door, like I told you, the door was open for this market to go higher. And this is a little bit scary for anybody who was bearish. So we get up here and we post a essentially almost like a gravestone doji. And not so, you know, people saying, I knew it. It was all a fake out. And we dip back in here and they turn around and rip these people again. I would think we're probably close, like I told you, kind of close to the top. So when we look in here, at least the short term, just short term, and we have that European thing, so anything could go and happen. So you can see here, we did get some good volume. This is real strong volume at this time of the morning. So you did rip some people here because remember we talked about this. Some people were like, you knew it. I knew that was a fake out. So they got short on this rip here. They got taken out. You see how the stops, you see all that volume? So you knew they got smoked. But how much more follow through are you going to get? Because the people that got faked out here, I don't want to say faked out, but let me put here. Yeah. So the people that said, I knew this was a bunch of malarkey. You see, you idiots got long, and now I'm going to get paid, okay? You see? And then they've got their shorts, and they go, I'll just put my stops just above the high. And I'm probably going to get back to, I don't know, I'd probably say 1360. You guys were so stupid to get long, and so they, and look what happens. Right here, you see that? Look, here's 14. Here's the close right there, okay? So this is probably like about 1425. Look what happens here at 1425. We start moving higher, and look, right there, wham, they hit all those stops. So the person probably said, many people did say, if we get above 1425, which is this close here, I got to get the heck out of Dodge. Obviously, if you move this back here, then look what happened. Whoop, there we go. And you gun those stops. So my point being is, not to say the obvious, oh yeah, I can see that. No, my point is, you've taken these people out here, and look how much of a rally you've already had. How much more can you really add on? Now, they did add, but we're coming in close to this resistance level here. And if you look on a 1 minute, we come back here and you get this little gravestone doji right here. It doesn't really mean anything. I guess the volume hasn't been too bad because if you come back here, you got to get rid of this big old fat bar and you look here. The volume, you know what? It hasn't been too bad. If you look at it, you see here, if you look here, 600 contracts right there. Look at that. And they thought the market was tiring out. Look at that. 600 contracts traded here, and look, nothing was happening. So people were starting to get short or thinking they've reached their, I won't say their zenith, but look, we did back in here. We come up, we hit the highs by what, about 3 pips or 3 ticks, and look how the volume jumps back up, 600. And look at that. Look at this. Look how much. That's a pretty good trading here, right here. Then we drop down to 400 to 600 to 600. So you can see that. Now we have dipped back, not a whole lot. We dipped back only 10 pips. But my thinking is you probably are ripe for a little bit better, an okay correction. You see, this volume hasn't been too bad right up in here. I mean, it pales in comparison to what we saw here, but that's because they stopped out all these people right here. So anyway, there's my take on the euro. Same day VWAP is down here at 1435, so another 17 pips to go, which may not be a bad area if you look at this. Look at this right here, right there. So probably not bad right there for them to go for down here. And then the more better support is going to come here at about 1403, which if you took about 17 pips is going to put you at around what, like about 1390. I guess it would be 1390. So this would be equivalent to the spot of around 1390, 1388 right there. And that's 2-day VWAP. But right now, I think we may hang around up in here, and then maybe we can start to pare back because we are pretty stretched here. And we've had some, doggone it. Oh, there we go. We've had some pretty good volume. Look, once we got up in here, we're not even moving. And okay, like this is okay, 200, well, 400, 300, 200, maybe 175, 200. But look, we're not even doing anything. Look at this bar. And we jump up to 600. Then we fall back down to about 400. Look, we pop up, what, 3 pips or 3 ticks, 4 ticks maybe. We jump up to 600. We drop to 400. And now 600 and 600. So you can tell the market, and then you get this dip here, right here. We come back up in here, and now we're not doing anything, but look, it's a steady move lower. And we look pretty vulnerable, I would think, from here. And then you look at it 30 minutes. Nothing to say that you can really hang your hat on. The only thing I will say is if you look here, the slower moving average, which has been cupping this downside, that comes in at 1422. So you probably do have about, realistically, and we'll put in the trend line here. Look at this. So you probably have about 25 pips you can pull back down in here before you find some, and then you run this across the board for a lot of touches in here. So let's call it like right there. Let's go right there. So you probably look at, doggone it. So you're probably looking for a pullback for about 25 pips, and your risk really is just here, this 1469. We'll open it up. It's actually 1467. Look at that. See all these touches right in here? You see? That's pretty good. So you're not risking a whole lot right there. How much more can they go higher? And if you do get a gravestone doji, but we won't close for another hour. But if you get, then that probably opens the door. And even if you get down here, that's probably what, about 20. Let's take a look real quick. Right there, that's 27. So once again, I'd say about 25 pips potentially down here to come back in here. That doesn't mean we can't push lower, but you know. I don't spend too much time on these. You can see the cable. Look at this. You see how the cable made this high right in here a half an hour ago? And look at the volume. Look at that volume pop right there. Let's get rid of that. Look how everything's relatively quiet. Look at that. You see that? We're trading about 100 contracts for 35 minutes, 40 minutes, on average about 100 contracts. And then we jump up in here, and we jump up to about, what, almost 600 contracts on this move. And then another jump up in here, we get about 375, and now the market's looking a little bit tired. And then you can see, then we have a pretty decent slide here of about 25 pips. That's what I'm saying, where it helps to use the futures to get a look. And then when you take a look at the cable, you see, look at this gravestone doji there. That was worth 20 pips right there. You know what I mean? When you look at it in conjunction, You say, wow, we got a big volume pop. Oh, look, we're not doing a whole lot. We still got some good volume. And this is after we've been averaging probably about 150 contracts, 135 contracts. Just back and forth. Even as low as, look at this. Some of these were down here to what? And this is an even. Look at that. That's even. That's 87 contracts. So look, and then we jump all the way up here to 550, 560 contracts. And still we trade pretty high at 340, you see? And now look. And then look, when you look at the 5-minute, now I got a gravestone doji, and look where that gravestone doji came in at. Right here. Look at that resistance right there. You see these touches coming across? That's good volume touches right there. Came in, your risk is right there, 26.33. So that's what I'm saying is, even if you don't trade the futures, it makes sense. And look how we've got same day VWAP coming here, 25.97. So if you can push this a little bit lower, and right in here, this is a good area, this 25.99. And we're also, you can see here, we're marking a gravestone doji here on the 2 hour, but we have another hour to go. Because the futures, it's the next hour for them to close because they open at 5 p.m. Central Standard Time. Let's go move into the futures. I don't want to spend any more time. We're already way over now. Let me move into the futures. I mean the indices. So we already covered about the NASDAQ and why yesterday I thought we might have a low. I didn't think it was going to be a full-on blow like that's it, the end of the day. But we talked about once again, we talked about the importance of volume and how when we got down here, look at the volume and go back in here. Right. Okay. Trying to get over here. I think I already erased them. I guess I did. Yeah, there we go. So we had those big volumes. I've got the thing all scrunched up so you don't see it as clear. But we had those big volumes that we saw here. Remember, we talked about this here. And once we got up in here, because it's not as segmented as it was before, but you can see here, this was good volume. This is huge volume. At this time in the NASDAQ, this is like huge. And we're trading up here. Look, 6,000 contracts, 7,000 contracts, 6,000. This minute after minute after minute, 6,000, 6,000, 6,000. When this trade's like maybe like 1,800 or something like that. So this was just a lot. So for us to be trading, and still, even here, we're trading at 3,500 contracts, 3,500, 35, minute by minute by minute. So you can see here, we weren't making any more higher highs in volume. And it looked like, okay, we're probably a little bit sold out. And once again, we started to work higher from here. That was the take there. Now, what I'm looking for, we did get that gap, and they kind of filled in the gap here. You can see right here. I would like, but I don't know if it's going to make it the 10,780. And that would confluence to 61%. I'm not sure if we can make it up there. We'll have to see. Probably have to want to wait till the cash open. And you can see it more obvious here in the 2 hour. We'll take a look at the SPOOs. Some decent volume in here. I haven't paid that much attention to the SPOOs. But they've been a quiet session. You can see that they're just riding under this same day VWAP. You can see that holding it right here. Let's take a look at the 30-minute on the SPOOs. I haven't even paid attention. You can see on the 30-minute, you can see they went right to this exponential moving average, which is a 27, and then they formed a hammer. But we haven't done a whole lot with it. You see what I'm saying? But once again, volume's light because we had so much volume yesterday that the markets are tired, and they know that because everything was happening in the cash equity session, I mean to say, they know that's where all the action is going to be. So when you see a big volume, like a big move like we saw on Monday, and then yesterday, the market, that's why I ended up focusing on the NASDAQ, because I'm like, well, that's where the action is right now. Why do I need to move into another market right now or mess around with the SPOOs? The action is happening in the NAS right now, and that's why I was just basically focusing on just that. So it's the same thing. If all the action is happening during the U.S. equity session, where these indices are moving, then you can see why now even in the Asian, although I thought it would have been more heated, but even to the European session, why the market's all of a sudden so much more quiet. We did get a little bit of good some volume here. You see this dip here, and we saw some pretty good volume here. Not huge compared to what we saw from yesterday when everything was going bananas in the pull back here. Look at these volumes here. You're looking at 15,000 a minute. You see what I'm saying? 15,000, 14,000, 15,000. Well, I put in these lows, and you can see as we go down here, and you can see here, pretty good little setup here. And really in markets like this, it even pays then to even look at the 1 minute, where you're actually looking at the 1 minute to see where it breaks in here. But even then, volume didn't take off because the market was still scared. It wasn't like, okay, you know how we talked about the cable where the volume really took off. The market was still concerned. But you can see here, the volume was real steep, but as we got here on this dip, notice how, even though it doesn't seem like it's a lot, volume was dipping in here also. And so we weren't heating up, thinking that the markets was really going to take off. So someone, I guess, technically could put their stocks below that. And if they held, now we did move higher, but it wasn't like we got gangbusters. Still, there was pretty good moves here, nonetheless. If we go and look into the 30-minute here, same thing. You can see here you had a long-legged doji. You see how you finished in the middle, which generally what that means is then bears don't have control, bulls don't have control, and we usually go in the opposite direction of what the recent move has been. Well, the recent move was down, so you look for a move back. And you can see, and then you would expect the first area would be this 3167, but we did dip, but look how we formed a hammer, and that opened up the door for us to move higher. And hence, that's where we're at right now. So that's it. But we'll see you in the chat room, and thanks for joining us here on the European Crossover.